Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Market-wise, let's take a look at it out here. You get the Dow Industrials up 113, Nasdaq's up 23, S&Ps are up 9.5. Gold contract up $1.70, trading at $1,230 an ounce. Silver up 2 cents rather, at $17.18 an ounce. Platinum down $5.90 at $1,250 an ounce. Copper flat at $3.03 a pound. Light sweet crude off 92 cents, trading at $81.18 a barrel. Bonds, you have the 10-year flat, 30-year flat, 10 years at 127.02, 30 years at 141.21. King dollar down 161 ticks at 85.78. The euro is up 22 at 126, and the yen is trading down 23 at 108.04. Our phone number is 877-927-6648. It was called, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, we are right at the highs of yesterday, folks. 1961.95 was the high of yesterday. We've hit 1962.78. If you take a look at the SPY, what we have with the SPY right now coming right into that high. We're at 196.11. We've hit 196.26. The high of yesterday is 196.20. And this is where it's going to get really interesting, and this is why. So yesterday we did 154 million shares. Couldn't hold the price. Pulled down. Closed at a price point out here of the 194.93. Had lighter volume, 154 million. The 154 million is going against the 221. Now today, we're at 83 million. So what we're going to see is that we're going to probably end up with about 50 million at the most. The real key is going to be, can we hold 196.20, number one? Larger yet, though, is do you actually hold the high, the closing bell from yesterday? It looks at this point that we will. We'll see where this shakes out. Now that's on the daily. We take a look at the weekly. And weekly, no doubt, is impressive. The weekly out here, what we did price-wise, we went from 188 to 196. Volume-wise, it's not there. We've done 675 million thus far. That's going into 872. The high of the downdraft there is 197.60. We haven't made that area. What I expect you're going to see in these next 55 minutes is that you'll see it back off slightly off of the high of yesterday. The real key is going to be how far does it back off. NASDAQ composite. We go look at the composite. What you have with the composite, same setup. They're all going after the highs right now. The composite up 23 bucks. We're at 4475. The high of yesterday was 4475.54. We've got over that. The real key is going to be, okay, where is this going to be closing out? Are they going to be able to juice it up and into that level? What we're going to have in the NYSE is light volume in an extraordinary way, probably around 650 million versus 800 million. And the NASDAQ, what we're going to have is that you're going to have 1.6 billion versus 1.9. The three Qs, the NDX 100. NDX 100 also going, if we use the three Qs, yesterday the three Qs, we hit a high of 98.36. We've hit 98.45 thus far. We're going to do, we've done 27 million right now. I'll do about 32 million. The 32 million is going against 48. Real key is going to be what type of backing off will this do coming into the close. Weekly basis, the Qs went from 92.80 to 98.45. That was a 210 million versus 286. So on the weekly scale, the baby is not there, period. Gold contract. We take a look at gold. What we have with gold, they try to push gold down into lower price today. Didn't succeed. And Friday's the day they normally can succeed at that, too, by the way. We had a price spread today in gold of $12.34 was the high. $12.28 was the low. When you take a look at this on 85,000 contracts was going into the low of yesterday, which was 108.40,000. That was going into the day of strength that had 258,000. Now, if we take a look at the GLD, which is the Street Tracks Trust, what you're going to see there, and if you don't have the future bar, the GLD is down on 3 million shares today versus 6.4 yesterday. versus the day of strength of 9.4. So bottom line is that the way this GLD is still set up and the gold contract, GLD wants to go to 123. Gold contract out here, we pull this up. Gold contract wants to run up into this 13. Well, 1297. 1297. The swing point where I'm going for there, folks, is the 28th of August. Bond market. We go take a look at bonds. The ever-ready bond market just won't back down, folks. What you had out here today, price spread went from 127 to 127.14. We've done 1.2 million contracts. Yesterday, I believe we did about 1.3. 1.4 yesterday. So you're backing down. You have lighter volume. You're backing into 2.2 and 2.2 million contracts. So that is still saying bonds want higher price, lower yield. Right now, the 10-year is yielding 2.269. 30-year, US Z4, we go into the 30-year. We take a look at the 30-year. 30-year right now, flat market. Price-wise out here today, we went from 141.20 to 142.17, so that's quite a spread. It's almost a full point. We did 317,000 contracts. Yesterday, you banged out 372, and we're going into 596. King dollar. We take a look at King dollar. What you have with King dollar? King dollar backed off slightly. That we're down 24,000 contracts. You're down 161, and you know she's going to need more contracts and price as it moves into lower price. My take is that we get an ABC structure on the way down. We have a high volume spike at the low of 84.52. That's going to get tested. The real key at that particular point, as it gets tested, will it get tested with volume? Will it break with volume and break downtown? Some of the high volume stocks in a low volume market out here. You got, let's see. So Pandora's off 320. You got Facebook up 28 cents. Amazon's getting smoked. We'll go through Amazon. Amazon's an ABC structure on the way down. Amazon is down 27 at 285. You get Juniper Networks off of $1.27. Delta is up 137. You have American Airlines up 119. Some of the large cap stocks out here, you got American Express up 64 cents. Caterpillar's up 10. Coca-Cola's up 11. You got Oxy down 135. Big Blue is down 62. 3M is up 355. And we'll just go over to Amazon first. We take a look at Amazon. This is what we have with Amazon. Amazon come out with the numbers last night. Market didn't like the numbers. Bottom line, Amazon wants to go a lot lower. There's a million gaps down below. It's an ABC structure on the way down. And when we take a look at this, you're going to see how this is set up. This is a clean ABC. And what we have had happen here, and this is pretty intense because Amazon had to do an extraordinary amount of shares today in order to do this ABC structure on the way down. And guess what? It's done it. So it's going into a swing point, and being the most conservative you can be is that I'd take the swing point before the actual low. See, the low is the week of May 9th. The week of May 9th, you get the 22 million shares. The price is 284.35. We've hit 284, so it's already broken that. The week prior to that, we did 33 million. So I'm going to take 33 million and say, okay, you're breaking 33 million on volume on a weekly basis. Bottom line, yes, we are. We've done 35.6 million on a weekly basis. That 16 of that is today. That's why it's so dramatic, folks, that the volume characteristic as of yesterday is like, okay, you want to hit it, but you had to come out with numbers, you had to come up with something that's extraordinary in order to break that. So in that context, what you have is this. You have a monster ABC structure on the way down. You just take the high to the low. It's a good one. You know, the high up there is 406. Your low is 284, right? So what's that? 16 and what did I say at the top? Yeah, 16, say 22. It's 122.8 a B. You take the 122 bucks off of 364. What do you got? You got 244. 244 is coming at you. It's breaking it and breaking it with volume. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials right now up 103. Nasdaq's up 20. S&Ps are up 8.5. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow Industrials up 103. Nasdaq is up 20. S&Ps are up 8.5. And if we go over to the small caps, folks, we look at the IWM. IWM out here right now is trading at a price point of 110.87. We take a look at this in the correlation of what it's looking at here. And so this is what you have. IWM has been one of the weakest indices since the start of July. You know, first leg in July, that was 120.97. Does a nice run down to the 103 area. Hasn't been able to get any juice to get back inside this 109.86. The 109.86 that is the lows that were generated on the first leg down. Now, that's on the daily. We put this up on the weekly, and what you're going to see on the weekly is really the same type of characteristic. And that being, when the IWM, we got into lows with 432 million shares. This week we'll do 225, and the 225 is going into 320. So the IWM is still showing that it's a weak dog inside the market in general. If we take this and we put this back on a 3-year basis, what you're seeing is that the IWM basically is, when it went downtown, it basically took back a year. Right now, the IWM is trading out about where it was trading last October. The weekly basis here, you're going into 290 million shares, and thus far we've done 225. So the way that the IWM is also trading, it doesn't have enough juice to get up and over that whole level. We go to the XAU, gold and silver. XAU out here is trading flat. That's on the daily basis. We put this on the weekly basis, and on the weekly basis, it's just getting back inside. It's really a close call, too, because it's just getting there, too. We're at 76.16, and realistically, I'd like to see it get back inside 76.68. Makes a lot more sense. You have a spike down there. It's 75.39, folks. But the reality is that you're back inside the spike, but the range itself is anywhere from 76.68 even up to 77.54. So that needs more strength. We go to the Gold Bugs Index. We take a look at the HUI. HUI right out here. That is trading at 185.28. And this has always been slightly more, well, let's put it this way. It's been stronger, for about 3 months right now. Slightly, but it's been stronger. So what we do have with the HUI, 185.30. Yeah, that needs juice too. That's not in the range. That really has to get back inside 188.39. So in both cases, they need a higher price in order to get back inside that higher range. We go take a look at the actual silver contract. What we have with silver, this is trading out at 17.17. Now, what we had with the silver contract today and the gold contract, and this is, well, it would be slightly bullish, and what it would be is that they couldn't get both of them into their lows. Friday in the metals market, folks, can get really nasty. Silver is into the low bar, however. That low bar started, it's just out of it, actually. It started at 17.15. Right now it's 17.17. Oil. We go take a look at the oil market. Oil market, folks, okay, you're going to be saving a lot of money on oil this year. I mean, big time, too. We go take a look at crude oil. Crude oil is still teetering at this $81 level. The way this is set up right now, it looks to me like she wants to do a much larger ABC structure on the way down. We'll see how she's going to hammer into these lows out here. We've been going sideways since the October 14th level, and we've been down there with some juice. Today's not bad. Even though oil's down, you can make a case that, okay, it's pushing to the low of yesterday with lighter volume. We've done 250,000 contracts today versus 355. In that context now, if we go to the XLE, the oil and gas index, that's trading at 85.48. And this little baby here looks to me like it very well may be the first one to start downtown again. The XLE had gone down from 197 into 77. The bounce on the XLE so far, hasn't happened. Well, it's happened. We went from 77 up to 86. Right now you're at 85.46. On the weekly basis, just has no juice whatsoever. On the weekly basis, we're actually going to be, looks like we're going to be closing under the high of last week, and that's a whole different animal. We had gone downtown with 270 million. You're going uptown with 143. That's on the shorter term basis. The longer term basis, inside this XLE also has a high volume spike down at the 53 area. You know, it's going to get some support at 77, but you break 77 and you get some action on the way down. Financials. The financials, they basically, right now, they're trading out at 23.05. That's the XLF. And the XLF also is showing it wants a lower price. What we had out here yesterday, you had a nice juice into the close with the XLF, meaning 80 million shares was going against 89 million. Today, it's giving it up. You get 17 million shares. That's on your daily. On your weekly, what you have is that you are going into 294 million, and right now you're doing 244. If we take a look at the JP Morgan, and then we'll go take a look at Berkshire Hathaway. Berkshire Hathaway is the largest weighting structure right now inside the XLF. JP Morgan up by 49 cents today, 6 million shares. Well, that's not even close. That's going into 29 million. That correlation there, folks, is totally, you know, pictured. 6 million versus 29. When it starts getting to be like that, it's pretty amazing, meaning 75% less volume going into it. There's no buyers out there. Berkshire Hathaway, BRK. We take a look at Berkshire Hathaway. What we have with Berkshire Hathaway, that's trading at 139, 1.9 million shares, and that's going into 6.5. So there's some correlations inside of the XLF that baby also wants to go south again. And if you remember something, the XLF, it took quite a while for that to basically break when, in fact, the first time that we had a break in the marketplace last February, it was the IBB. Now, if we go over to the IBB, that's at an all-time high. Yeah, it's up $4 right now, 1.1 million shares. That's on the daily. We put this on a weekly, and what you're going to have on the weekly is that she's way over the highs. I mean, the highs there is 280. Inside of that, the largest weighting structure of the IBB is Gilead. Gilead is up 339 out here today. And she is coming into, this is like a, okay, so we're at 110.64. We've hit 111.45. We've done 12 million shares. This one's going to be interesting, too, because these are the three highs. This is like this would be amazing if actually this is a triple top, because these are hard to, it's really hard to do a triple top. That's the bottom line, folks. But right now, it's set up for a triple top. First high up there, 110.64, you did 14.3 million. Next high, 110.59, you did 15 million. Today we're going to do about 14 million. We'll see where I can hold that price. You stay right there, folks. We're coming right back. Dow Industrials up 109, Nasdaq up 21.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. See, you get the Dow Industrials right now up 104, NASDAQ up 23, S&Ps are up 9. When we take a look at good old Alibaba, BABA, what you have out here, what's going to get interesting, of course, is that how is Amazon going to track when Alibaba starts coming into the U.S. With their game plan? Bottom line, what you have is this. Alibaba's at 96.22. The high of the day it went public, folks. This is what it did. It traded from 89.95 to 99.70. That's how that shook out. I expect, you're going to get that high more than likely tested. Thus far, on the daily basis, it's tested with dramatically lighter volume, which is expected, of course, because of the first day that Alibaba trades. Thus far, also, Alibaba has called the top of the marketplace. That's what's really wild in the whole aspect of the market in general. So we'll see if, in fact, that's going to be the high period, and I'm talking about the high for year and a half, whatever that is, or just the high for this year, or the high for a couple of weeks. thus far, when we take a look at this, that high in the S&P is 2019. Apple, of course, is, well, here, let's go over to Amazon for a second. So what you have with Amazon, too, is this. Figure something. Alibaba, folks, is an Amazon, is a PayPal, is eBay, all of the above. The way Amazon is set up on a much longer-term basis is that it can take a hit in an extraordinary way. And when I say an extraordinary way, we're at 287.45. The last time Amazon had any volume on the way up, folks, goes all the way down to 125.68. Now, what Amazon had done also is that in the 2008 downdraft, Amazon was the first equity off the bottom. And it was off the bottom, you know, quite a while before the rest of the market got off the bottom. That took off the bottom April of 07. It made a run from $39 all the way up to 101. And then it did come all the way back to, you know, test that 39. It actually went underneath it. It went back to 34 and 208. And then it just went nonstop up tenfold. So it went from 34 up to 408. It comes off of that, and if you want to see volume off the high, Amazon has it. You know, Amazon hit a high on a monthly basis with 81 million shares. It comes off that high with 138 million shares. It does a counter-trend bounce on a monthly with 99 million shares. And thus far this month, we've done 83 million, and the 83 million, this is pretty cool. So check this out, too. So Amazon is an ABC structure down on a weekly basis, and it's confirmed today. You know, we're doing way more volume than the weekly. So it's confirmed to 250, 244 to be exact, or 286. On the monthly basis, it very well could do the same deal. It's going to have quite an expansion of volume, but thus far, you know, that can happen. We've done, on the monthly, 83 million shares, and it would have to do over 138 million. And I'm doing the same thing there, being conservative, meaning I'm not using the lowest bar, because what happens is that whether you're doing an ABC structure on the way up or the way down, folks, when you have two bars that are right next to each other, and the price point is not that far away, you got to use the highest volume. And the reason you do that is to make it the hardest in order to get that formula together, meaning that it wants to basically break with volume. You know, but Amazon is it's set up for a lot lower price. And as we come into the holiday season, I expect Amazon is going to sell a huge amount of product. The real key is going to be, is it going to be enough that folks just don't keep selling it? See, when you look at when I look at Alibaba, and I think that's one of the main reasons that they actually also went public in the U.S., our companies can't get into China. In this particular case, China companies can get into the U.S. The fundamental setup inside an Alibaba versus an Amazon is different in an extraordinary way, because what has happened is that Alibaba doesn't hold product. What they're doing is that they're letting small businesses, big businesses, establish their business on the platform, and they're taking, whether it's 25 cents, 50 cents per transaction. It's a small amount per transaction. But what the difference specifically is that the brands that are there inside that platform, meaning a big bazaar, they are getting to brand themselves, number one, getting to get the business, number two, and of course Alibaba gets, whether it's 25 cents, 50 cents, you know, whatever that number is, $2 or $3 per transaction, and the expense cost is not in Alibaba's deal. Where Amazon, you can be on an Amazon store, and we sell a lot of books on Amazon. Bottom line, it's a great deal for us, there's no doubt, because what ends up happening is that Amazon holds the supply, Amazon ships it out. You know, we come in the morning, they say, okay, they need this many books. We ship the books out. They have different warehouses across the country, so they'll tell us where they want to ship the books. We ship the books to that warehouse. They send it out, you know, and every month, you know, what ends up happening is that they just deposit money in the account. What the difference there, of course, is that it wouldn't be, it's not the TFNN brand. What ends up happening is that it's the Amazon bookstore. And that is the same how it happens no matter what you're buying. I mean, because inside the real estate company, We've bought plenty of tubs off them. We've bought toilets off them. We've bought jacuzzis off them. What you do in that context, what does happen is that most of those larger products you are paying through Amazon. That's what seems to happen. I'm paying through Amazon, but what is happening is that the actual tub is coming right from the manufacturer. That's how it seems to shake out. So, the gist of it, with Amazon going lower, is two different things. The supply and demand curve is much lower. That's the first one. I suspect once Alibaba gets up and going, and who knows when they're going to do that, they're gonna have huge competition. Amazon is, it's just going to be there. It's a different business plan, but there's big competition inside of that whole deal. We go and we take a look at the three Qs for a second. The NDX 100 coming into this close, they're at highs. Bottom line is this: if these all close at highs, yes, we can go higher. Right now, the three Qs are at 98.49. 98.36 is the number. Inside the NDX 100, what's putting juice into the NDX 100 today is CLAC. CLAC is up 5.21. That's doing a special dividend of $16.50. Maximum integrated is up $1.20. You got Liberty Ventures up 116, and Gilead's up 336. Taken away from it, you have Amazon is down $26. Altera is down 66 cents. You get Intuitive Surgical off 750, and Equinox is down 268. Microsoft. So let's go take a look at Microsoft. Check this out. This is going to be intense watching how Microsoft's going to shake out here. And this is why. Microsoft was testing its high of the 19th of September. The high is 47.57. The low of the high was 46.60. The volume is 202 million. Thus far, Microsoft hit the low of the high, 46.60. You've done 54 million shares. So the way that's set up is that that's a test with lighter volume, and that's saying that Microsoft doesn't have to go down dramatically, but it'll stay in the consolidation. That's on the daily. On the weekly, what you have is that Microsoft's coming 204 million versus 341. So the way that also sets up is that says that would stay in the consolidation. The high of the consolidation being 47.50, the low of the consolidation being approximately $42. If we go over to 3M, that's exactly what 3M had done yesterday. 3M is over that price point today. 3M had gone up to the high, which was testing at 147.87, 8.1 million. Yesterday, it got to a price point of the 147.92, failed. Back up there today. Now, this is what's going to be really cool about watching how 3M goes. The reason being is that you have 147.87 with 17 million, and we've done 21. We've done 21. That's saying 3M can go a lot higher. So you close over this 147.87. Let me bring this back on a monthly basis. Yeah, so on a monthly basis, this is pretty intense. You can make you could actually make a case that this might be a monster ABC up. That's the case. It's going to be intense because the 8 point on this, if I do it the most conservative, 123 to 143 is still $20, which would $20 will only get you 150 or 148. Another one is out there though that's pretty close, meaning 87 going all the way up to 140. That one's an intense one. So that would be 55. That gets you about 175. It's Tom O'Brien. This is TFNN. Dow Industrials are up 125. Nasdaq up 27. S&Ps are up 11.5. You stay right there, folks. Coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now up 124. You get NASDAQ up 29. S&Ps are up 12. Some of the large caps out here. You have Boeing up 47. That's after getting smoked. ExxonMobil's up 36. You get Citigroup up 41. McDonald's is up 59. 3M is the mover inside the Dow Industrials once again. The Procter & Gamble also. Procter & Gamble is up $2, traded at 85.32. That's the first mover, largest mover rather. 3M is number 2 at up 3.46. Microsoft is up $1.03, and Pfizer is up 57 cents. Taken away from it, you have 3 stocks in the Dow that are in the negative territory. Visa's down 92 cents. Chevron is off 36, and Big Blue is down at 162. If we do take a look at Big Blue's got some big problems. This on a much longer-term basis. Right now, this is making its way. It's going to be pretty intense, actually, watching how this shakes out, because Big Blue's at 133. Big Blue's at 162. 133 is where it looks like it wants to go down a trade to, folks. And the high in Big Blue is 210, I believe. Yeah, 215.90. Now, and Big Blue is a classic as to going sideways for a long period of time with no volume. Big Blue had been going sideways, folks, since August of 2011. And then this month it just croaked. And when it croaked, it took everything with it, by the way, okay? And it's the financial engineering inside Big Blue, and bottom line is that it wants to go a lot lower. And if you break the 133 area, then 116 is game, and it's game in spades too. That is on the monthly basis. What we have thus far on the daily, on the weekly basis, is that you only have one gap. Bottom line, equities, folks, when they gap away like this, meaning a large gap, IBM had gapped away from 178 to 167. Okay, so that's a monster gap. When you gap away like that, they like to gap away a few times. I suspect that's only the beginning of it. Procter & Gamble. So Procter & Gamble come out with numbers this morning. It looks like the market likes whatever they're saying. And in the context, what it is, I suspect, is that they're selling Duracell batteries. What they're also doing is that they're claiming that they want to be more focused. What it has done is that it got to a price point out here of $85.97 today. The high is $85.82. It's not going to hold the high, but it has some volume underneath it. So that's saying, like, okay, I'm not holding the high right now, but I'm going to be back up into that level. That's on the weekly basis. On the monthly basis, we have, let's see what we have here. So on the monthly basis, first high did 151 million, and right now we're at 178. So that is saying that it can mess around up here. It can test the high of today once again. And we'll see whether it has enough juice to get up and over it. You know, as this got over the $71.94 area, it hasn't had any juice since that point. And when that does happen, most of the time what you get to see is that it falls off. They start selling it out. We'll see how that shakes out. Ma Bell come out with numbers. It held the bottom thus far, meaning the bottom at $33. What you do have with Ma Bell also has been in consolidation for a long period of time. Now, what the difference is, this is where this gets cool. The difference in Ma Bell and the consolidation versus IBM is that Ma Bell actually has volume as it's pushing into a high. When we pushed up to $39, April of 2013 had some good juice. When we pushed up just in July to $37.48, had some good juice. So the way that's set up is that every time, you know, if you're looking for a bigger dividend, you know, Ma Bell, Verizon, those babies there at the lower end of those consolidations would be a good place to basically put the trade on, and you're looking for the higher end of the consolidation. If we go over the, and in fact, you're looking for that consolidation to break as it does get higher. If we go over to Verizon, Verizon's trading at 48. That pays a 4.5% dividend. This also has a high volume high in it, which is really just sweet. You know, Verizon looks that it's basically the strongest telecommunications stock out there. That's the way this is set up right now. Yeah, and it very well could be a very large ABC structure on the way up. The A point on this would be 24. The B would be $50. So you're talking about a 25 A to B, which would end up getting you, what, 50, 60, 75, about $70. Inside that same telecommunication media space, it's going to get intriguing to see if, in fact, the Comcast deal will go through. And this is where, you know, you talk about, it's pretty amazing when you talk about whether soft money, politics, and all of the above. So check this number out, folks. So what Comcast is trying to do, what they're trying to say is that no, and Comcast is trading at 54.12 right now. Good number. And what Comcast is trying to say that, hey, listen, you should let this go through because of the fact that, well, here it is here. The question of what counts as high-speed internet service is emerging as a sticking point in the Comcast bid to buy Time Warner Cable. And this is what it is. The top federal regulators propose a definition that would leave the company with as many as one-half the broadband customers. Too much, say some critics. It's definitely too much. If one company, folks, has one-half of the internet for high speed, okay, they'll crush anyone in the business, period. What Comcast is trying to argue is that they're trying to argue that the definition of high speed, that shouldn't be taken into consideration. What should be taken into consideration is the amount of folks that are still out there on AOL on telephones, okay, which is insane, okay? You know, that's out there, but bottom line, folks, that isn't going forward, meaning there's no growth in a telephone internet type of business. And if, in fact, Comcast could win that argument, then that argument would be basically saying that Comcast would only have 1/3 of the population of the United States versus one-half. You know, so there's a lot of people putting bets on this, either bullish or bearish. When you talk politics, when you talk soft money, I suspect somehow it's going to happen, and what that's going to be all about is that the amount of soft money that actually goes into, you know, the coffers of congressmen and senators. You stay right there, folks. Dave White and myself, we're going to be coming back. Dow Industrials right now up 132, NASDAQ up 33, S&P's up 13. We're going to be right back. folks, this is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. This quote is by Vincent Barnett. Almost everything is more complicated than it seems, but almost nothing is hopeless. As a bear, I'm not too sure about that right now. Market-wise, let's take a look at it out here. Dow Industrial's up 127, Nasdaq up 30, S&P's up 13, gold contract up $1.20, traded at $1,230 an ounce. Silver up 2 cents at $17.18 an ounce. Platinum down $5.80 at $1,250 an ounce. Copper flat at $3.03 a pound. Light sweet crude down 80 cents at $81.29 a barrel. Bonds, we had the 10 and 30-year flat. The 10 years trading out at 127.01. 30 years at 141.27. King dollar backs down 156 at 85.79. The euro up 22 at 126, and the yen down 16, trading at 108.17. Our phone number is 877-927-6648. Give us a call, folks. Well, that's going on in your world. The world of the S&Ps, what do you have? Cash S&P, it's at its high, folks. 1963.81. Closes over its high. That puts game on for 1970. That's 1970. That's your next swing point up there. We take a look at the SPY, the SPY. The volume characteristic, not even close, but bottom line, you got a higher price. We did 110 million shares today. You're up $1.50. And what we have out here is that your next spot up here is 197.60. We'll see whether it can basically drag itself up into that area. On a weekly basis, we did 702 million versus 872 on the way down. NASDAQ Composite. What do you have with the Composite? Composite, same type of setup. Composite closed at its high, up 30 bucks, 44.83. And on the Composite side, that 44.64 was the number. The other, each one of those swings it closed over. That's the bottom line. That's on your daily. On the weekly basis, did basically the exact same thing. The swing is 4496, which is 13 points over it. I suspect that the ESO is going to get into that swing point. We take a look at the NASDAQ 100, the three Qs rather. Three Qs did 42 million shares on the daily, closed at a high. That is going into 286 million. We did 225. Let's go to John in Winchester. Hey, John, what's going on?
Hey, Tom. Hey, good call a couple of days. You said that the S&P was going to most likely head up around 1967. And you saved me a few shekels on that.
Yeah, I should have paid attention to it before I went shot yesterday and this morning.
in the scheme of things, 10 S&P points is not
I know that. It's just frustrating. I know that. But
well,
I thank you, man.
Money, so. Yeah. Good call. So you think it's going up to 1970?
That's the next swing. What happens is that when you're at a swing point and you closed over, which we did, that's basically sticking out there. It's actually 1967.68 to be exact.
Yeah.
Unfortunately, in most of these big retraces after huge bear moves,
right,
they don't let you in easily if you're a bear.
Right.
And if you're a bull, you walk in and the S&P's down 40 points and you don't know what to do.
Yeah,
you don't have the courage to go ahead and pull the trigger and just say, okay, I'm going to sell. And that's why most people ride those other sides down for so long.
Yeah.
Is that you don't get an opportunity to get out easy. And for shorts, they don't make it easy for you to stay short.
No, they don't. Oh, well, yeah, I would. That's right. About staying short, you got to keep basically going after it. That's the bottom line. So you
right. Yeah, I was looking at Delta.
So Delta, it's up $1.52. So if you're looking to short Delta, let it get up to that 39.80. See, that you got a swing point up there at 39.80, and that's where it came off the highs in June. Well, it made a high of 42. It has volume. The top of that volume is 39.85 to be exact, man. And that'll crawl up there, man.
My girlfriend's trading. She lives in New York right now, but do you have a station out there that you can listen to in New York?
The easiest way to get us is right on your cell phone at tfnn.mobi. It works great. That streams 24 hours a day, man. And
MOBI.
that's okay. So that's it. That's if you just want the audio. If you want right on your cell phone, you can just go tfnn.com and hit the Tiger TV, and you get the charts as well as the audio. And next week we hope to have a surprise for you. These charts are going to look a lot better.
I got a question. Do you know when earnings are on that? I haven't looked it up.
On Delta?
I know there's a bunch of earnings for airlines next week, though.
Not Delta, yeah. 21st of January.
Okay, so they've already had theirs.
Yeah.
All right. Thank you, guys.
Have a great one, man. Have a safe one.
Okay.
Now, we got a guy that's going to straighten us out in the S&P.
Okay.
We get Dave from Tampa. Hey, Dave, what's going on? Oh, he's gone. Bummer. Okay. What you have out here, folks, okay, you get higher highs. You're coming into those swing points. Bottom line is that I expect that swing can probably get hit. To me, it's still a counter-trend bounce. There's no two ways about it, but the bottom line, it can get hit.
So I know you've been watching Apple.
Yeah.
What did it? I know that it closed around 105 today, but
it's over its highs. You know, I mean, it has no juice, but once you get over its highs, you can go higher. You know, so we take this, we put this on the monthly basis, and the month's not even close. So the month we did 2.3 billion, and you're at 1.1. So that's telling me Apple's going to fail. But what you'd want to see happen, folks, is that it's 100.72. That's still the benchmark.
I think, if I remember right, I was looking at it earlier today. The daily, that 101.70, and I think what September 23rd high is like 101.70, and it came on like 140 million shares. And ever since we've gotten back above that 101 level again, I don't think we've come anywhere close to 140 million shares.
No, we haven't. We haven't.
So I've been watching it.
It's on air. There's no doubt.
And
there's no doubt.
The way I always look at it is above that level where you had that huge volume spike that one day in, I think I'm pretty sure it was September 23rd of 2012.
Yes.
Yeah. You had that huge spike, and then it started rolling off after that, just a few days after it. But you see that huge volume, and for me, now that it's back above 101.70 and you've never had that volume, that's a good indication that you could have the trap door open at any time on this.
I agree.
Now, I heard you talking a little bit earlier about companies in China. And the whole deal, I think that they spiked a little yesterday by the CEO coming out and just saying, oh, everything's going to be wonderful in China. But I'm a little skeptical on that because I've seen Ford say everything was going to be great in China and then kind of walk it back.
Right.
I've seen Yum come out and say everything's going to be great.
Right.
And suddenly some China company that gives them their chickens, they're all full of Ebola or whatever it was.
No, that's a big problem.
And every time everybody says that everything's going to be easy, including Google, they go in there and they just finally leave.
Well, you know, it's intriguing. Now this is that food deal, though, right?
Uh-huh.
That wasn't a Chinese company. That was a U.S. company.
It was.
Yeah.
Okay.
And so check this out. Now, this is important to understand, too, folks, okay? As these companies have been growing, the food deal there was a U.S. company that grew substantially, because what happened is that years ago when McDonald's was just starting, they had got the contract with McDonald's. Made a huge deal. Now, what they did do, it might be a subsidiary of it, but the bottom line is that they were in China, so it's maybe a Chinese company now, but it's still stationed here, and the controls weren't in place. You know, so there's problems, period. And I think this.
To me, it was Google was probably a good indication of whether or not you were ever going to be able to get past. You know, if you do exactly what they say, can you do business there? I think you have to pay off the right people, but that's difficult because you may go to jail here for paying them off over there.
And if you do it over there, you're definitely going to go to jail now, because now what China's having now, folks, which is just amazing. Can you imagine trying to walk through doing business in China because you have to pay someone off, but now politically they're basically wiping out half the political communists because it's the Communist Party that runs everything. Nice way.
I don't know how you do business over there. I wouldn't know.
Yeah, not anymore. Dave White, Tom O'Brien. Dow Industrials finished up 127. NASDAQ up 30. S&P's up 13. You stay right there, folks. We'll come right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. And, folks, as you're over at TFNN, what you're going to see right under breaking news here, the art of timing the trade charts. You can test drive that 30 days right here, right now. Dave and I are going to go over some of these charts right now, because what you do have, which is really sweet, when you get any type of high moves, meaning in this case with saying we've gone down quickly, you're doing a huge retracement on the way back up, and then of course what ends up happening is that's going to set up confluence, that's going to set up expansion, contractions, all of the above.
Well, what I've heard you being saying all week long is all the ABCs in the marketplace.
I know, man.
And when you hear Tom say that, the first thing that goes through my mind is let's go back and look at confluence levels, because if they're good ABCs, they're going to set up monster confluence levels,
Right.
which are pennies and dimes thick. So you're going to have an extremely good education about how you can put in your stops, how you can get out of playing the other side of the bear side bounce, right?
That's right.
The counter trend bounce. And these. So we've got a lot of these charts that we're set up on.
And what happens here, which is really cool, folks, as Dave just said, you know, penny and dime sized confluence areas. We brought this up before, but when you have a confluence area that's very tight, it's just absolutely awesome, because you got to pitch something. As we show you some of these, you're talking about spans of price that are pretty extreme, and then you're talking about confluence levels. And confluence levels, folks, are areas of agreement between a 0.382 and 618 of different trends.
Right. So
And it's very hard to get a tight one. That's the, you know.
Well, in most markets, you're kind of like range bound,
Yes.
and you don't have them.
Right.
But what we had was a full move down,
Right.
and now these, most of these stocks are coming back up right now.
Right into them.
Right into the levels, and what you have to see is look at the volume to see whether or not you'd like them. But the real nice thing is normally you have to give $1 or $2 or $3 sometimes for your stop. On these, if they go up and they close back down, you can fire off right there. If it goes the other way, you're out of the trade.
Exactly.
And your risk reward goes from 3 to 1 to 10 to 1.
It does.
Because you can make sure that you can have a lot. You can be 10 times wrong, and still the next trade can bail you out, right?
And with this is what's cool, folks. So picture this: the 3 to 1 is that what you always want. When you come up to a confluence level like this, most of the time you'll even get a 5 to 6 to 1. But that 5 to 6 to 1 only gets you to the bottom of the swing if it's not an ABC down.
Right.
And what Dave's talking about, when it's a 10 to 1, well, if you get the ABC down, which thus far, that's the market we're in. Which is just amazing. Do you know what I mean? But it's great when you can have it both ways, right?
Right. Now, I thought we'd take this segment just to start, and then we'll show some more charts.
Okay, cool.
But when we talk about confluence, there's the main number that the other two Fibonacci retracements are figured off of.
That's
There's
right,
one
the focus number.
Right, that focus number in the bottom, and in this case we're showing AT&T here.
Right.
So this focus number here is the October 15th low at $33.10.
Yes.
So what you want to do is figure off that one to the next major high, which was October 3rd at $36.16. Then you use that original October 15th again and figure out the Fibonacci retracements to the July 29th high at $37.48.
Exactly.
And what that gives you is a very narrow range here, just under $35. And guess what? It came right on up there. It went right into the center of it, and earnings out the next day, and boom, right back down the other side.
Yeah.
Now, go ahead.
No, it's just, and what happens, folks, is that these are defined trends. You know, when, this was basically in my first book, when Dave was developing the software in this, we sat here right at this desk for long periods of time. And we realized when you get defined trends, they're even better. Because they're cleaner. Let's put it that way.
If you're out in the ocean, you're fishing.
Yeah.
And the water's just chopping all around you.
Right.
Not too bad.
Right.
You get a tsunami comes in.
Right.
It comes right on in, just keeps on going.
Right.
And that's kind of the difference between a trend. It's the difference between a market that's just chopping around there, waves and winds coming in every direction.
Right.
But you get a real trend, which is waves, the hurricane pushing in water. That's a trend that you may get some pullbacks in it, but that trend tends to go on a little while. And the way you think about it is the same way a laser works.
Sure.
Light on a regular light bulb is just bouncing around all over the place, right? You get a 1-watt laser, you get a 60-watt bulb, not a big deal, right?
Right.
You get a 1-watt laser and put it in your eye, you're going to blind you. I'm permanently blind you. I mean it.
Yeah.
So when you get everything going together in the exact same waves, which is what a laser is, it's the exact same thing when you get all the waves going in the ocean the same way. You really get a lot more power than just all that chop going back and forth. And that's when these ABCs show up, or when you have those kind of trends that just keep continuing, because every time they come back down, you get the next load of sellers or buyers, right?
Yes, and that's a great analogy too, folks, because when I was first learning Fibonacci, you live and die by this deal.
Right.
And in the water, if you want to have some fun in the water, you can do this either in the ocean. If you're in the ocean, I remember the first time I did it was a large log, and I was taking the water and I was pushing it against the log. And it was only like 6 or 7 feet away from me. And I was watching it hit it, and I was watching the retracements bounce off it. And that's when I realized, this is interesting. So it's the power of the push versus what the retracement is. And it's there. And it works in a dramatic way.
Let's do another one here. It's T. Rowe Price, T-R-O-W. If you want to go back and go through Tom's book, which is an excellent example how to use these confluence levels.
Right.
He literally wrote the book, so
right.
He's sitting next to me. But what you have is the focus number out here, which is the October 15th low, right? And your first A point out here is the September 2nd high at $81.50. And the next number you want to use is your July 3rd high at $85.74. Now, what that gives you is a very tight number here between about mid-76s to mid-77. So this one's a little bit wider, but still awful good. What I do want to show you is that normally when you get back up here, you find that the volume just falls out of these. Even if it's going higher,
yeah,
it's going sideways most of the time for a while before it gets any energy to go back higher.
Yes.
So especially when you come to these downtrends, if you decided to buy this thing off the bottom, that's exactly where you should be taking your money in these confluence zones.
That's right. You can use it both ways, folks.
And if you're thinking about shorting, these bounces actually are fairly decent back into it. Like soda had a huge day today, right? Because I picked this up earlier today too. But a lot of times when you're looking at these moves like we're seeing soda,
yes,
you know, and you're down here and you're thinking about being short, you always need, or maybe you're still short, you think it's going to zero, you always need to be knowing just how far the thing can bounce back up. Now, if we look at soda, what a great ABC down, right? You had one day that really made the B to C thing, and that's all you had.
Amazing.
And the trend continued along with this gap down. But basically, you had pretty much the A to B and the C to D were almost the same dollar amount.
Right.
Pretty much one-to-one projections down there.
And even if the law of vector is the same, that's pretty intense.
So you've got the energy coming down. But on this one, when we look at the focus number, it's the October 13th low, like so many of them are going to be, $20.15.
They're cut in half.
Right. Your A1 is July 24th at, what, $36.53.
Yeah.
And your second one is $47.29 on April 23rd. Guess what? You get about a 15-cent wide projection out here. What is that? About $30 and some change.
Unreal. You stay right there, folks. Dave White, Tom O'Brien. We're coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. And, folks, as we're talking the art of timing the trade charts, if you'd like to check this out over the weekend, the easiest and best way to do that so you can see the power inside these charts is go to TFNN, and you're going to see in about the middle of the page, it has 4 tabs. One's Listen Live, one's Newsletters, one's Upcoming Events, and the other one says Charts. If you go to Charts, what you're going to see is that David put together some dynamite videos. So we got a bunch of videos out there explaining exactly how this works.
Right. So when we're talking about Confluence, if you still haven't read Tom's book, which you should have already, but if you haven't and you want kind of an introduction to what we're talking about, you think we're talking alien speak, it's not, and it's not that tough to understand. We put together some short 5-minute videos on things like Confluence and Fibonacci retracements. You can watch those videos, and maybe you'll understand a little bit more about what we're speaking
No, you'll understand a huge amount. And folks, even if you don't want to go test drive the charts or buy the charts on a subscription basis, go, if you want to understand, and in fact, I got a question like this today by the email, and it has to do with swing points and all that. Go look at those videos, because the videos, there's no doubt, the videos that you did cut to the chase really quick. And they're dynamite, because they're clean.
They're not everything you need to know. You still need to read the book.
Right.
But if you want to get a bird's eye view of it,
right.
Very, very good.
And what does happen, too, and I understand this, believe me, folks, because even when you read the book, what does happen is that when I was, doing seminars, whether in person or on the web, it is easier just pointing it out.
Right.
You know what I mean? As to what it is. Because there's a million things that are right in front of us at all times. Then all of a sudden, once it's pointed out, it's like, oh, my God, that's what it is,
Anyway.
So now we're looking at Confluence again. And now this one's going to be a beauty, too, folks. Oh, actually, look at that. That came in with volume of that 3 days ago. That's too bad.
Well, that was a big intraday where it was red.
Yeah,
I mean, it came back, it opened higher and came down on volume that day, right?
So we're looking at United Technologies and Confluence on United Technologies right now.
And I know for about 2 months you've been calling for this thing to go lower. It went into an ABC and you were short it?
Yes, we hit the first leg down.
Okay. So now it did its little retrace. Now what you can expect off these bottoms, of course, is with a great ABC down like this.
Right.
And what happens at the end of an ABC? It does something different, right?
Exactly.
Okay. So the difference part is it's mostly going to bounce back up to some level of confluence, and at that point it's going to go take another run at the low.
Right.
If it can't break that low out, then it's going to bounce again. So your trade would be set up for a short to go back and test the low. If it tests the low successfully,
that's right.
You go for the whole ABC.
That's right.
The full.
And as we're talking, folks, what you'd end up doing for your money management, you go for at least a 1 to 3 from where Confluence is to the low. Right. And most of the time, it's going to be more than that now because of the bounces.
Right. And because if you pick a Confluence level that's very narrow, like the ones we're showing you here, instead of the big fat ones,
right,
you're going to get very good. Now, in this case, the focus number is the October 15th low at $97.30. The next number that you use, your first day point, is the August 27th high at 110.34. And then you go back up to the next one, the June 9th, up here at 120.19. And that sets up a nice little confluence level that's right above that 105 area. And all you have to do is get into that thing, and you're going to know real close.
That's right.
Real fast on which side you are. And a nice little trade for the back down the other side, right?
Well,
possibly.
And no doubt. And two different things end up happening here, by the way, folks, in some of these where the confluence is. If you're in the equity market, great. You can do the equities. What ends up happening is this market bounces, and you're going into confluence. Well, guess what? Just like Dave got a killer trade last week, a few of them, but one of them in the IWM was insane. And you can go into the option market because the
risk reward
and the defined risk is unbelievable. Okay, so what you're putting up is the defined risk. But in that context, what you also have is that you're in confluence, and you know what your price target is. When you know what your price target is, folks, in the option market, what happens is that you can calculate what you're paying inside of a premium for that.
We've had a huge move down in crude, right?
Yes.
And it may go lower.
Right.
But I wouldn't be shorting it here, right? You'd want to have been shorting it much higher.
That's right.
But it still can bounce. And if we look at the Fibonacci's on the USO, the United States Oil Fund, what you look at here is the possibility, right, that the October 16th low is a low for a while, although it's not bouncing much, right? But you've got this October 16th low, which becomes your focus number. The first A point is the September 29th high at 35.62. And then you use the next one up, which is the June 20th at 39.44. So what that gives you is a very tight one at about 33.50. And you don't have to go a few pennies on the other side. If it got back up there, I imagine you would thinking that it's time to pull the cord once again, right?
Well, it looks
for that 77 test in crude, right?
Exactly. 77 and 75 is screaming out there, And the way that crude did trade out there today, you back down to the trading of Wednesday, you did it with lighter volume, so it's set up that you can that it won't break the range next week. Let's put it that
But
way.
your risk-reward shorting here would be horrifically bad.
No, it's not. No, it's not there.
If it got up to that level, you could look at it again.
Different ball
now,
game.
if you were real bullish on crude,
Yep,
you
that's
could
a buy.
play the
It's a buy here.
trade and go up to that confluence level and just get out because you don't really know what's going to happen.
Right.
Take your bread and run. But at the same time, I would not think that I would go play this for the retest right back up to the September 29th right off the bottom, right?
No.
It's not most likely going to go 100% down, 100% right back up.
And what's cool about these confluence levels, folks, is that if you look at our chart, I mean, if you understand Fibonacci, you can see them.
Right.
Because you can gauge them. But looking at a chart, that does not look like support or resistance. It never does. It's in the middle. Most times they're in the middle of nowhere. You know what I mean? It's like, how does it work?
We want to go start some of this?
Yeah, so let's, earnings. Okay, earnings next. We've had earnings this week. You know, some of them were basically decent. You had a couple of good ones. Most of them were good, but they sold the stocks down, the big stocks. Anyway.
Right. Now, Microsoft
Yeah.
had some interesting, looks like they're stealing a little business from Amazon and their web services business.
Yeah, I saw that, huh?
So that was kind of interesting. They also turned a profit finally on their Surface tablets that they've been advertising the living daylights out of.
Yeah.
It's actually a profitable part of the business. So now they're into the convertible business. But for them, it was always like, we're going to get into it, another story here, where they actually get into making a prototype for other companies to follow. And that's really all. Microsoft doesn't want to be in the tablet business. But what they do want is have a reference design so other people can understand it. And the problem was that Apple was out doing their own thing.
Yes.
But no one else like Dell or Lenovo was really getting excited about trying to make a high-end laptop to compete against the AirBooks and stuff from Macintosh.
Okay.
So they just said, hey, we're going to do it, and you guys, this is how we're going to build one, and we're not going to be in this business forever unless you guys don't step up. If you don't step up, then it doesn't really matter, right?
Interesting.
So Google does the same thing, and we're going to talk about it in a minute. They showed their new, they call them quote reference designs. When I was designing electronics hardware and software, anytime they had a chip like a video compression chip or something like that, they always had this board, and it was a reference design on how it was supposed to work.
Yes.
And you'd buy that board. It was horrifically expensive. It'd be like buying, if it was a video display board, it would be 10 times the cost of another video display board.
Okay.
But they hand it to you and go, it works. Here's a design that works. If it doesn't work, you can call us, but here is a design, and this one works, right?
Yes.
And that is what the reference, quote, reference design is all about in electronics.
And then they want you to build stuff on it, right?
Right. They're not interested in being the manufacturer of all the things that we made.
Right.
But they are making one, and they show you that the damn thing works.
Right.
And I think Microsoft really in the Surface business is really trying to show people that if they do make an expensive laptop, that people will come. And now Microsoft's making money on the deal. They had the first two versions that didn't do very well, but at least now they're in that point where they're actually making money. So
it's amazing.
They have changed.
And there's no doubt that the larger MO on Microsoft on a continual basis is they just have so much money. They just keep going until it works, it seems. Sometimes it takes them a year, sometimes it takes them 5 years.
There's two kinds of companies. Apple has always been known as a revolutionary company in that they want to overthrow everything.
Yes.
Okay. Microsoft early on took the idea of the Japanese companies, and Bill Gates spent a lot of time in Japan talking to people like Toyota that did things and came out of nowhere. And they have a term for it, but it translates in English to constant and never-ending improvement. Try to be 1% better every day, right?
Right.
And, of course, Apple is different. They want to throw a Molotov cocktail at the building, burn it all down, and have something tremendous. Unfortunately, it's awful hard, like we've seen in the new iPhones.
Sure.
You can make it a little bit bigger, right? But it's not revolutionary anymore. It goes to evolutionary, and Microsoft's always decided they wanted to be the evolutionary country. And that's how it takes them 5 years, but they get there, right?
Dave White, Tom O'Brien, you stay right there, folks. We're coming right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. The Dow finished up 127. NASDAQ up 30. S&P's up 13. And we're in earnings season. It's just going to keep going, isn't it?
It is. And Monday, Armstrong Worldwide, Merck, Seagate before the bell, after the bell, Amgen, Buffalo Wild Wings, Trulia, Twitter, Universal Health Services. And then on Tuesday, we've got before the bell, Coach, Corning, Crocs, Freeport McMoran, after the bell, AMC, Anadarko, Applied Microcircuits, Cray, Electronic Arts on Wednesday. You go to ADP,
I love it when it's like
Allen.
this. It's going to be a big week.
ConocoPhillips, Garmin, Goodyear, SodaStream, which already had their little bounce today. On Wednesday, Baidu, Cirrus, Flextronics, Visa. And it just, for the next 3 weeks, this is what it's going to be like. Good. Every day it's going to be a Super Bowl of earnings. So we're going to continue on.
Okay, so we talked about this a little last week, the August Smart Lock.
Yeah, did we talk about it? I didn't think we did.
Well, we said the August Smart Lock, and then we ran out of time.
Okay. Anyway, we've been talking about the Internet of Things and the devices, and of course, the real first big thing was the smoke detector that would talk to you.
Okay.
And the thermostat from Nest.
Yes.
Those things. Now we're starting to get into some other things. This is kind of interesting. Price point probably a little pricey for most locks when you can buy a lock for $10 at the door.
And how much is this?
$250.
$250. Okay.
But,
and what does it do?
What you do is it works with the Bluetooth in your smartphone.
Yes.
And when you approach it, it automatically unlocks.
Okay.
So when you leave, it'll know that you're on the opposite side and lock the door as you go out the door. So you don't have to carry an extra set of keys anymore.
Yes.
But if you have an armful of groceries, instead of fishing for your keys, setting your groceries back down. Now, some of the other neat features of this thing.
What happens if you lose your phone?
Well, this is on the inside. It's got a regular key on the outside still.
Okay.
So if you lose your phone, you'd have to lose your phone and your keys.
Okay.
Right? It will work on either side.
But what I'm saying is that if you lose your phone, someone walks out to your house with the phone, they could get in, right?
They could.
Yeah.
But you can call them instantly and they can turn it off.
No, that's cool. Okay, now let me ask you this. So can you also, I guess, looking at this, and we're looking at a picture right now, folks, if you're in your car traveling, you probably can change whatever the cylinder is on this also, right?
Correct. You can
electronically, right?
Right. Now, you can also give people, let's say you've got some friends that are living at your house for a week.
Yes.
You can say, okay, allow this phone's Bluetooth for 1 week, and it'll roll off in 2 days or a week.
Yeah.
Or you can just say, somebody's working there for the day. You can give them a pass for 5 hours, and their phone will be the key for the next 5 hours, and then it goes away.
Well, you know what's so cool is that we have short-term rentals.
Right.
And this would be really great for short-term rentals, because what ends up happening is that on the short-term rentals, people rent them for as short as a week sometimes.
Right.
You know, a lot of them are monthlies, but we have a lot of weeklies. And we've been trying to figure out, right now I use lock boxes, and we make sure we get it back. But this is a lot better.
You never have to worry about getting your keys back.
Well, what happens with this is that you also, when the transfer is taking place, I know when the transfer is out. Like what happens now, transfers are Saturday morning. So tomorrow morning, Saturdays are always really busy for us. So Saturday morning, we always got to make sure everyone's out, the cleaners are coming in, because they're out by 10. We get people coming in at 3 in the afternoon, so. We the Economy, 20 short films that you can't afford to miss. This is Dave's YouTube channel of the week.
Well, actually, it's not the YouTube. I put that up there by mistake. Oh. It's my website of the week.
Oh, cool. Okay.
It's We the Economy. And Allen from Microsoft fame, the billionaire, Paul Allen, has put $20 million into making 20 different movies about the economy, and really geared at teens to young adults that know nothing about the economy. Some of the titles, like the one I watched today, are about supply and demand. Yeah. And it's a song and dance number, and it talks about everybody coming into these 2 different stores and the supply and demand, and as it goes back and forth, and they all raise the prices, then pretty soon everybody quits buying the stuff from them, then it comes back down, and then they have fire sales, and it shows how the supply and demand in this little song and dance number changes over time.
That's pretty cool.
But it tries to get the point across, and some of the stuff is a little politically correct for my taste.
Yeah.
But most of the stuff is pretty much on the nose about understanding the economy, what the government does, how the government's influence in the economy works. But $20 million, and there's some really big name stars in this stuff. It's not like they were, like this is a lot of blood on the highway films that you saw in high school about, really bad kind of low quality stuff. Very, very extremely well done.
WeTheEconomy.com, right? Cool, man.
And there's different films on there. We were talking about Google coming out with the reference designs.
Yes.
And they have. Now, on the tablets, it's the Nexus 7 and the Nexus 9. And on the phone, it's the Nexus 6, which is even a yet bigger 5-inch phone.
Okay.
So, and 6-inch phone. So you've got phones getting bigger. Probably this is an interesting design. To me, the bigger part...
How big is my phone? What is the Samsung? What is it?
The Samsung's, I think yours is 4.7 inches.
Okay.
But this one is not so much the size, but it's the next evolution of the operating system. If you ever used a tablet and you wanted to give it to your kids,
yes,
they can log into their account and then watch all... When you go to, let's say, Netflix and you watch movies,
right.
I watch a lot of documentaries.
Right.
If I hand it to somebody else, it's going to recommend documentaries.
Yes.
Okay.
Right.
But let's say you have a couple of kids that want to watch cartoons.
Right.
Everybody's always saying, the kids polluted my tablet now.
No.
Everything that's always coming up is cartoons.
For sure.
It has a sandbox, so you can put all the different accounts in it. And
That's cool.
And Apple's kind of just getting into the beginning of this, but the next version and the next version of the operating system will sandbox your applications. So you'll be able to go back in and say, okay, I'm using it as Dave, or I'm using it as Steve, or Sandy.
That totally makes sense.
And depending on what age you are, it won't pollute all the other accounts to start getting these weird kind of things. And you're going, well, why is Netflix telling me to watch a bunch of kiddie cartoons?
Yeah,
well, you kids have been using the tablet for a while, and that is why. And so you'll be able to set up various accounts. In fact, Netflix is setting up the ability for you to have one account with multiple people, I think up to 5, so that they can have their own tailored experience right when they go into it.
That totally makes sense.
So that's really the next big phase of software, both in Apple and in Android, are these what they call sandboxed applications, so that they don't talk to everything else on that same machine, right?
Yeah.
They're unique accounts.
Which makes sense, because what has happened, there's no doubt, folks, TV, streaming, Tiger TV, it's all out there. There's no difference right now in the context of what's happening.
I got to get this in. This is your last chance. We've got the best deal ever on my daily newsletter, The Path of Least Resistance. $30 for 30 days. It's up. Get to it. Chop, chop.
Have a great one, folks. Have a safe one. We look forward to talking with you and being with you right back here next week. Thanks, Dave.
Bye.
Go get them, folks.